head to Berlin now, where our economics editor David Tweed is standing by. David, it's a big day, to say the least.
Lindsay, you know, twice a year the ECB moves the location of its meeting to one of the Eurozone capitals, and this time, yes, it's in Berlin, and it's ironic, really, because Berlin has been the source of a lot of the political tension between the ECB, which has felt that it's need to become the region's firefighter because of a lack of commitment, a lack of urgency, maybe, from the politicians. Now, as for today, there are options on the table. First of all, there's a nuclear bazooka, and that is that the ECB should actually go there and commit to unlimited purchases of government bonds. Whether that's likely or not, we'll see. Secondly, certainly providing extra liquidity to the banks, you mentioned that, or maybe even cutting interest rates. Now, to discuss all of that, I've got Professor Ansgar Belke from the University of Duisberg-Essen to discuss it. First of all, that nuclear option, I mean, the idea that people are calling for the ECB to actually make a commitment to buy unlimited amounts of government debt. How likely do you think that is as an option?
So I think it's really unlikely, because this would lay open the political and financial dependence of the ECB, and this would undermine the support of the population anymore, because all polls say that the support is shrinking, and the euro area cannot exist in the future without political support of its most important institution. And what is more, it might be inflationary, because if you upload everything on your balance sheet, toxic papers, in the end, if you have standing facilities at the same time, this must be inflationary.
But a lot of people are saying that if it's not the ECB, then the other institutions within the European Union just aren't going to be ready to do it. I mean, what about the EFSF, the rescue fund? I mean, a lot of people say, even with the changes to that, is it going to be big enough if there's a banking crisis and we need to see recapitalizations?
At the moment, I have clearly to state that it's not large enough due to technical reasons. If you try to enlarge it to sums proposed, like 1.5 billion or even 4 billion of euros, there would be a huge problem, because the donor countries would lose their AAA rating. France is in danger, this is the decisive country, and also Germany is in threat of going down.
So how do you see that fund being beefed up so that countries don't lose their AAA ratings? I mean, what can they do for it?
I see two options. The first one is to give a banking license to the EFSF. And in case of a liquidity crisis in Italy, in case of contagion effects, if Greece fails, there must be some liquidity infusion by the ECB. And the EFSF could use collateral, for instance, Italian bonds, give it to the ECB, and the ECB giving unlimited liquidity support.
And do you think that the ECB would actually would get involved in such a program and involved in providing cash to the EFSF and for collateral?
Of course, the ECB will be rejecting it, at least in the public at the moment, because this would convey the impression of even more dependence on politics. But from the perspective of the German taxpayer, for instance, it's very important to have a seat on such kind of decisions of unlimited liquidity support.
Let me question on that whole issue of politics, because we're going to see a change at the ECB with Mario Draghi coming in, an Italian coming in. How do you see his influence changing the way that the ECB deals with this whole political situation?
Yeah, let me first state that he's an Italian and was under force to underline that he's more German than the Germans, but we will see whether this would be successful in the end. But if you look at Trichet, he also fulfilled the expectations from a German point of view. Always 1.97 percentage points of inflation, but he did make a fault in the sense that he did not look at the leverage emerging from too high money growth rates, and the same mistake might be done by Draghi as well. So we do not have necessarily to fear a kind of liraization of the euro. Maybe this will be a euroization of the lira.
But do you think it's possible that we might actually see under an ECB under Mario Draghi acceding and actually providing or working with the EFSF to actually help leverage that institution?
Yes, this cannot be excluded in a sense in the end, although they would not publicly admit it at the moment. And what Trichet will do is, of course, to lay the grounds for Draghi, and maybe there will be interest rates on hold.
Professor Belke, thank you very much indeed for talking to us. Lindsay, it's back to you in the studio.